Perhaps you've heard of a synthetic stock before but don't know what it means. It's basically just an asset formed through other assets. It's designed to be sort of like an exact copy of a stock. But why do people go through so much trouble to make one? Why not just buy real stocks instead? Well, of course there's a lot of different reasons depending on each individual investor, but mostly it's for leverage. Moreover, there's also the question of how they're made. It's a bit of a complicated process, which can be tricky if you have no background in finance whatsoever. If you're a beginner investor, it might even be more confusing to do. But don't worry, we'll try to explain them to you in the simplest way possible so that you can get acquainted with this process also. And with enough preparation, soon you might be able to pull this off too if you want to. The topic of synthetic stocks is rarely discussed anywhere, and there are very few explanations on how it is made and why people go through all the trouble in making so. That's probably because it is a pretty difficult strategy which mostly only experienced investors are able to successfully make. But it's a fun topic to learn once you get into it. Hey, welcome to Stock Market Mate. Today we'll talk about the makings of a synthetic stock. Before we get into it, subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. What is a synthetic stock and how is it different from a stock? First of all, a synthetic stock is different from a stock simply because, well, it's made out of other forms of assets, while a stock wouldn't normally be. The term synthetic is used to describe financial instruments engineered to simulate other instruments, but with alterations to their key characteristics, such as duration and cash flow. Investors often customize synthetics with different cash flow patterns, maturities, risk profiles, and so on. Ultimately, synthetic products are tailored to the needs of investors. In sum, we can define synthetic stocks as an artificially made asset using the other assets in order to fit an investor's needs. In contrast to conventional stocks, synthetic stocks are derivatives, which are valued by smart contracts. In this way, one can trade the movement of price and value of traditional assets. But why do people make synthetic stocks just to mimic traditional ones? In most cases, investors create synthetic stocks when they believe the stock's options are mispriced. In turn, investors will take advantage of the arbitrage opportunity to increase their returns. An investor uses the arbitrage opportunity to gain profit by simultaneously buying and selling an asset in different markets to take advantage of a price difference. However, for the average investor, this information isn't very useful. The process of making a synthetic stock. The makings of a synthetic stock is pretty complicated, since we all know that it is derived from other forms of assets, which when combined creates the likeness of a stock. This means, to achieve a synthetic stock, we will have to devise securities that can mimic a stock's graph in which we can provide a dollar return for every dollar the price increases. Investors typically utilize European options, which are options that are only consummated on their expiration date, to make up the security needed. Furthermore, an investor needs to graph the return characteristics in order to know if a synthetic stock successfully replicates a stock return. It is our goal to attempt to make the graphs closer to the stock straight-line relationship. Usually, the entire process involves more technical terms and concepts, and what we've basically discussed so far is sort of just like a summary of the whole complex technique. This strategy definitely requires a lot of knowledge in finance to be able to pull off. Pros and cons of synthetic stocks. Pros and advantages. There are a number of advantages in making synthetic stocks. Less requirements. For one, synthetic assets could provide exposure to stocks, commodities, and currencies regardless of place or jurisdiction. Now, normally, the stock market needs no citizenship requirements for investors to participate. However, there are a few requirements investors must meet. In order to protect US interests, non-US citizens must produce identification documents, pass Know Your Customer screening, and comply with a number of laws. But with synthetic stocks, investors wouldn't need any of the requirements to enter the US equity market. This is why synthetic stocks are a favorable alternative for investors, especially foreign investors who face entry barriers. Synthetic stocks are easier to trade. Synthetic stocks are easier to trade as well as transferable. This means they can be sent and received by anyone using only crypto wallets and such. You just need Wi-Fi access and a little bit of knowledge and technology, and bam, you're in. Thanks to DeFi, synthetic tokens can be traded at any time, as it is always available. This is very different from traditional markets, where trading is limited to specific hours and days. Cons and disadvantages. Most of the time, something good often comes with disadvantages that are fairly subtle but can still have a big impact depending on how cautious an investor is. A synthetic stock is no exception. The cons of making a synthetic stock include: it doesn't provide ownership grant. Probably the biggest downside of synthetic stocks is that it doesn't grant ownership to the traders of the underlying assets. Although a trader can earn profit and gain exposure to an asset's price, the asset itself is only represented on the screen. Consequently, synthetic assets holders do not have shareholder rights, vote rights, or dividend rights. Furthermore, as DeFi is largely an experimental project, scalability may also be an issue at times. Hence, it is important that users choose the most appropriate blockchain when minting synthetic assets. Vulnerability. It is a well-known fact DeFi is very vulnerable to hacks and exploits, since its blockchain is permanent. Despite its reputation, decentralized finance is still in the preliminary stages, which means no matter how carefully protected a project might be, a single breach can lead to the loss of possibly all funds. For instance, there was one recent hacker who stole more than $600 million in digital assets. Fortunately, they were safely returned later on by the hacker. A quick recap. Finally, let's do a little recap and recall what we've learned so far about synthetic stocks. First, synthetic stocks are a decentralized option formed through the combination of a number of different assets. The purpose of a synthetic stock is to effectively recreate a stock and generate profits the same as stocks. Keep in mind that synthetic stocks can get a little tricky to make, which is why in order to tell if it's achieving the same characteristics as a traditional stock, one must accurately graph and record it until it shows a similarity to the straight line relationship that a stock has. Furthermore, in order to create synthetic stocks, most investors usually use the European style of options to make up securities needed. Furthermore, there are pros and cons to investing in a synthetic stock. Such advantages include that synthetic stocks require less requirements when it comes to foreign investors, which makes trading a lot easier. Another thing that makes trading easier is DeFi, which synthetic stocks are a big part of. Through DeFi, trade and transfer anytime or any place due to the fact that DeFi is always on 24/7. On the other hand, we've learned that the cons of a synthetic stock include lack of ownership rights as well as vulnerability. While it does come with great advantages, synthetic stocks also hold risks and drawbacks. For the investors who do not really struggle with such barriers to entry, it will most likely take quite a while before the benefits outweigh the risks that synthetic stock holds, which are rarely present in the traditional market. In conclusion, making synthetic stocks comes with a lot of complications. Although it gives impressive benefits, the cons are still something to carefully consider. Generally, investors don't usually make synthetic stocks, especially beginners, but it's still interesting to learn about them. However, what we've discussed in this video is really just the tip of the iceberg. There's still a lot more to learn about synthetic stocks and the market as a whole. Well, that's about it for today. If you like this video, kindly click the like button. For more videos regarding synthetic long options and stocks, don't forget to hit that subscribe button. Also, you might want to leave a comment below. If there's anything that we missed about synthetic stocks, type them in the comments and let us know your thoughts. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!